we have central banks to control interest rates to reduce economic volatility. The Federal Reserve has this dual mandate, and that's just the way things are. And I had never got any education on the history of central banking when I was in school, which I think is pretty absurd. I got a history in one class on economic theory and kind of how that evolved over time, which was one of my favorite classes. But how central banks emerged and all of that, it took me years to get into that. I think that my journey was I graduated college. I was always libertarian. I kind of cut my teeth on the monetarists and Milton Friedman, and that eventually led me to the Austrians. And I always had, I don't like to put myself into groups, but I would say that most of my principles, I would probably fall into the libertarian camp. And as time passed, I, got into industry and I was working in finance, and I started off at a management consulting firm, and we were the largest corporate restructuring firm in the world. So it's kind of weird because we do like investment banking type stuff too. But we dealt with in restructuring, it means like we dealt with companies that were having a lot of problems. And because we're big, we're dealing with like really big companies with really big problems. And so you see a lot of ways that things can go wrong in economies, like in our economy, in a position like that. And then I moved to a private equity fund that specialized in investing in companies that were kind of going through issues. And so I'm kind of seeing a lot of these issues, and I mean, you do it for long enough, you just kind of get used to it. And I feel like for a while, it was just always like, oh, this is just the way things are. Everything's pretty ass backwards. Like that's the modern economy. I don't know how that's going to change. And one of my good friends who was working in my first company with me, he was always pushing Bitcoin on me, but he had more of a background in like tech. So like he was interested in the technology of it. He's like, it's this really cool thing. It does all this cool stuff. And, I have a background in economics and finance. So I'm just like, I don't really care how cool it is. I don't understand it. I don't know what it's worth. And, but he kept kind of bringing it up with me. And, eventually I was kind of like, all right, I'll look into this thing. And I spent some time reading. And once the aspect of how Bitcoin can enable freedom within our system, once I started reading some material that was related to that, and I can't even remember what it was at this point. I think I was just like reading stuff on Reddit back then. That's when it kind of clicked on me, and I was like, this is interesting. And I started to read a bit more. And then once it clicked to me, like, oh, this is a way that we can compete against our incumbent financial system. That's when I started to go a lot more down the rabbit hole and spend a lot more time reading about Bitcoin. So with central banking, I started to get deep into, I didn't get, through that process, I was still working. So that was kind of happening in like the 2016, 2017 range. And then it was towards the end of 2019. I'd read a decent amount, and I'd figured out a lot more about central banking and our banking system at that point. But it wasn't until I quit my job at the end of 2019 to jump into this industry that first thing I was like, okay, I want to get deep into a lot of areas. And that's when I got pretty deep into central banking. And I think through that process was when I decided I wanted to write a book, because it was just obvious to me. I was getting into this industry, and I'm like, okay, well, I'm this guy coming out of a technical area of finance, and I'm trying to justify why Bitcoin is valuable to me. And I read a lot of the books in the industry, and I was like, I don't think anything totally sold me. Some of them have good bits and pieces here. Some of them are a little bit too moralistic about things. Some of them are a little bit too theoretical about things. And for me to write, I wanted to write something that was the book I wish I'd been given, so that I didn't have to spend all this time searching around the internet and digging through all these areas of history and reading all these books that I probably only need to read 10% of to get the relevant information for this thesis. So that's when it clicked, is getting deep into, financial history, central banking, money, and reading a bunch of areas that I hadn't had the time to read before. And I was just like, yeah, there's definitely a book here that needs to be written. And that's probably when I learned the most about central banking, is through that whole process. But I think that, there's a lot of interesting things. In my book, I kind of go through like, here's how the banking systems originated in the first place, which is an interesting story, or at least how these are very broad, complex topics. So like I focused on what's relevant to people in the US. But obviously from a global perspective, there were banks emerging all over the world in different areas at different times. But at least our modern system is kind of based around the central bank or the banking system that emerged in England. And so I started off kind of going into that. And our modern banking systems are all based around just like this goldsmith banking community that was formed in England. And then the central bank was actually the Bank of England was actually created when Charles II was borrowing from these goldsmith bankers, and he defaulted, um, and he wanted to pay them back with printed fake fiat money. So he created the Bank of England to do that, and those bills were rejected from the market immediately, and they subsequently went back to a gold standard. And these goldsmith bankers never even got their money back. And like that's how the first central bank that like we're really based around. Like there's others that were created in Venice and things like that, but that our current modern system is based around. That's how it started. And this whole lender of last resort problem was just because the government was borrowing from the private sector and defaulting on it. Um, so, and then that evolved, and then the banks started to emerge all over Europe. And then we came to the US, and then the Constitutional Convention was a highly debated topic around central banking. And at the end of the day, we needed them to finance wars. And that's kind of like one of the sad truths of history is like, as much as we hate banking, some of these fiat programs might have been what allowed the US to remain independent as well. Um, but but in any event, then we get into our, Federal Reserve System. And, a lot of people don't know that there were three central banks that came before the Federal Reserve was even instituted. And one of those ended in fraud under the chairman. Um, and, we get to where we are today. And now the system is just so much more complicated. And once we're on and off gold standards of different mandated percentage ratios for most of the 20th century, and then we get to when Nixon repealed the gold standard, and we've been in a pure fiat system ever since. That's when things get a lot more confusing, because then you get into this concept of, well, money is just debt now. What does that mean? Well, it's a circular concept. And because of that, our how money is created, how it flows through our banking system, how credit is created and contracts so easily, how the Federal Reserve is trying to backstop a lot of this volatility through all these different programs and tools that they have. That all gets complicated. And in my book, I tried to summarize that to a basic level, to the minimum level that I think people need to understand it in order to really see why Bitcoin is valuable and a good alternative to a system that creates credit like this. Now, that being said, credit systems will exist within Bitcoin, but when you when you remove the moral hazard inherent in our centralized control over credit in our current system, that's when the incentives are at least proper. And when people take on too much risk and they extend too much credit, then they're going to have to pay the consequences of doing so. And hopefully investment starts to shift towards things that are most productive, that most people want.